Welcome everyone to the Vested Interest channel. This is Shane, and this is our first stock pick of the day video of the week. We're going to take a look at Williams Sonoma. This is a specialty retailer, home goods really, out of the consumer discretionary sector. Now, this is the criteria we will be going through in this channel. This is the Vested Interest stock screener, or in this video, I mean. So it must meet 5 of 8 out of this above criteria. You can pause this, read through this. And it must meet 5 of 8 to make it onto my watch list. Now, if it does make it onto my watch list, that does not necessarily mean I am buying. It is just a watch list, but it does mean I am interested in doing more of a deep dive into the financials of the company, looking at their balance sheet, their income statement, doing a discounted cash flow analysis on the company, figuring out a range I'm willing to pay, and then possibly adding in the future if and when I'm looking to add a new position whenever it falls in that price range. Maybe I add it. But you should not be blindly buying any stock that I am buying or adding to my watch list. You should be doing your own research to make sure you are not blindly copying anyone that you are watching on YouTube or any other space. Now, Williams and Sonoma, check them out at their homepage, www.williamssonoma.com. That's www.williams-sonoma.com. That is their homepage where I pull this information from. And Williams Sonoma, as I mentioned in the beginning, they are a specialty retail. You buy them online. You can go to their stores. Pottery Barn, right? So house goods, stuff for your kitchen table. You've got cookware, cook tools, cutlery, so your forks and knives, electric stuff like coffee makers, espresso makers, tea makers, bakeware. So you get your not only your cutlery but your plates and all the stuff you need to bake and cook anything. Outdoor and garden, so your outdoor tables and chairs, your lounge chairs out there. Home essentials, like I said, think Pottery Barn, so they sell furniture for your house. So it is really a home goods store, right? Everything, whether it's inside or outside, everything you need around your home goods, a specialty retailer. You can, again, buy their things online, have them shipped to the house, or you can go to one of their stores like a Pottery Barn, Kids Pottery Barn, or some of the other ones they have or associated with. And you can see here, they started back in 1953. That was Chuck. He's the founder there. His first trip to Europe, that's where he got the idea around, their cutlery and their products that they had in Europe. He liked them, so wanted to be able to bring them back to the United States. That's the idea. That's what spawned the first Williams Sonoma store in 1958. Now, the reason we were taking a look at Williams Sonoma today, down 4.67% on the day, closed out the day at $191.95. Again, talking about Williams Sonoma, ticker WSM, out of the consumer discretionary sector. 52-week range as low as $125.33, as high as $219.98. They are still closer to their 52-week high than their 52-week low. It needs to drop under $144 and some change to be within that 15% of a 52-week low. So not there yet, not even really that close. Market cap of $23.4 billion, a beta of 1.52. So they are more volatile than the overall market. Maybe you can use that volatility to your advantage, buying when they're closer to those 52-week lows and then holding on the run-ups. PE, price earnings ratio, seems elevated to me for a company like this, 21.40, $21.40 per share. But if they are growing fast enough to justify it, that doesn't necessarily mean anything on its own. You need to look how fast is the revenue growing. Is it growing fast? Are their earnings? Look at how fast their earnings are growing. Is it growing fast enough to justify $21.40 per share? And will it grow, to where that number comes down over time? Earnings per share, EPS, $8.98 per share. Earnings date November 26, so coming up here towards the end of the year. If you're interested in that, I'm sure they will have it on their website where you can listen to their earnings call. For dividend, $2.64. They are quarterly payers. Current starting dividend yield is a little low at 1.31%, but are they growing it fast enough where that might not matter? Ex-dividend date, October 17th. So we've got couple weeks out, a little over 2 weeks out for their next ex-dividend date. Remember, for the ex-dividend date, don't wait till the ex-dividend date, October 17th. If you want the next dividend, buy it on the 16th or before, not on the ex-dividend date. If you buy on the ex-dividend date, you are not guaranteed to get the next dividend. 1-year target estimate, $204.84, at least according to Yahoo Finance. And it does look like they, ex-dividend date, they're saying, yep, October 17th, same number, yep, 11/21. So November 21st will be right before their earnings date, will be their next payout. So again, if you were to buy them now and up till the 16th, you would get the next dividend. Now, looking over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 1.77%, compare it to the current 1.31. Over here, forward 1.31, same number. Since it is lower than their 5-year average, that actually speaks to potential overvaluation on this one. So at least according to dividend yield theory, this one is potentially overvalued. Payout ratio is low at 27.39%, much lower than the 75% or lower that I'm looking for, so that's good. Went over ex-dividend date and dividend date already. We want growing free cash flow, or I want growing free cash flow over time, because companies have growing free cash flow. They can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, which this company does, pay a dividend, which this company does, and raise that dividend. And with a 27.39% payout ratio, they have a lot of room to continue to raise that dividend. They could even keep some of that cash on the balance sheet as cash or cash equivalents. So going back in time here, January 2022, 1.1 billion, 2023, 698 million, so down. 2024 back up to 1.4 billion, 2025 down to 1.1 billion. So it looks like some cyclicality with this company trailing 12 months, which again, keep in mind, does include still, well, trailing 12 months, still includes some of 2024 numbers. 1.13, looks like they're going to report trailing 12 months, 1 billion, just a little over. They are repurchasing shares as well. January 2022, 899 million pulled out. 2023, 880. So definitely a downturn there. They went down not only in free cash flow, but also in repurchase of shares. Went down in 2024, but still at 313 million pulled out of the market, a little more. 2025 back up to 807 million, trailing 12 months to 922 million. So they are repurchasing shares. We'll have to see if they're doing that efficiently by pulling more out of the market than they are adding in potential compensation. A lot of companies will issue stock-based comp to people, executives and above. So we'll see if they're doing any of that. All right, now stockanalysis.com, they have 16 analysts that have taken a look at this. They call this one a consensus buy. I will point out that August 28, 2025 was the last time these price targets were updated, so that is a little over a month ago. So keep that in mind. But back in August, the 16 analysts that took a look at it, they called it a consensus buy, low estimate of $166, so it would need to drop a bit lower, about 13.55% lower to be exact, to get to that low of 166. Average estimate of $199.13. That would represent a potential 3.7% upside. And if it happened to hit their high estimate of $230, that would represent a 19.78% potential upside. Now, looking at some statistics, I like to look at return on capital employed and earnings per share growth forecasted over the next 5 years. For return on capital employed, I like above 10%. They're at 42.11%. So over 4 times what I'm looking for there. Earnings per share growth, EPS growth is at 7.02. I like above 5% forecasted over the next 5 years. Revenue growth is forecasted at 3.5%. Quarterly payer, as we mentioned, payout ratio, again, very low, little higher at Stock Analysis than what we saw with Yahoo Finance, but still under 30, 28.29%. Dividend growth, extremely aggressive. With such a low payout ratio, it is nice to see it paired with double-digit dividend growth, 18.33%. 19 years of growth, buyback yield is positive, so they are pulling more shares out of the market than they are issuing, 3.8%. Shareholder yield positive at 5.17%. They do pay off schedule than most companies, February, May, August, November. Good way to get a company that pays off schedule. One of the ways you can balance out your dividend payouts throughout the year. Or, some people like to use monthly payers, which is fine too. Going back in time here, April 2023, they were paying 45 cents. April 2024, they raised it up to 56 cents and some fractions of a penny. July 2024, they raised it up to 57 cents. So 2 raises there, right back to back. April 2025 raised it up again, 66 cents. That's where it remains here. That's what will be paid out in October. Like I said, if you were to buy them now, you would get that next dividend at 66 cents per share. All right, let's run this one through the screener here. Again, understand the business. Yes, they are selling you house goods, specialty goods. Like I said, if you need some furniture, some outdoor furniture, you need some cutlery, think Pottery Barn. That's the easiest way for me to think of it. Whenever you walk around a Pottery Barn, everything in there you could find in their catalog as well. You can buy their things online. It doesn't have to be just at a Pottery Barn, but think Pottery Barn whenever you're thinking about what this company provides. Growing free cash, if you've been in a Pottery Barn, maybe some of you haven't been in a Pottery Barn. Growing free cash flow, no, it was a bit up and down, which is to be right. If times are good, people might buy new plates, silverware, cookware, furniture, outdoor furniture. But when times are slow, those are things people put on the back burner, right? So understand the cyclicality in the company. Growing dividend, yes, it's growing by double digits, over 18%. So very good double-digit dividend growth on this one. Dividend payout ratio is very low, under 30%. So check there. Dividend yield theory says they're potentially overvalued. No check. It is not within 15% of a 52-week low. No check there. Return on capital employed was over 40%. So definitely above the 10% that I want. Check there. Earnings per share growth was at 7%, so just over the 5% I'm looking for. Check there. We're looking at 5 out of 8, so it does make it on my watch list. And the only ones it doesn't get, besides the growing free cash flow, really are around valuation. So if this one was to drop within 15% of a 52-week low, I think that would also bring in the current dividend yield being above, or future dividend yield if it was to drop there, being above where I would want to buy it, right? Put them into undervalued territory. So really, valuation is the only issue on this one, other than the growing free cash flow. So this one is on my watch list, or if it's not, I'll put it back on there. But this is also one I owned at one point in time, and I ran some options on it and let it get called away, and then it ran up quite a bit. So that is the downside to options. You do have limited upside, but we're not here to talk about options. We're here to talk about Williams and Sonoma. So let me know what you think of Williams Sonoma in the comment section down below. Again, a specialty retailer online, and they do have some hard brick stores. Think Pottery Barn again. So let me know what you think of Williams Sonoma. Is it one you're buying? Is it one you're holding on? Is it one you're selling? Maybe you're part of that 4% downturn today and we're selling your shares. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Williams Sonoma you'd like me to cover in the Stock Pick of the Day series, drop in the comments. I'll work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment for educational and entertainment purposes. If asking involves risk, you can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Always seek the advice and counsel of a certified financial advisor.